All right, good morning, everyone. Today is Saturday, 4/22/23. It's almost 8 o'clock a.m. in the morning, and I want to try to get a quick market review in here before I head out for my day. I want to start off with the VIX real quick, folks. I want to point something out here and show you guys that the market is still not out of the woods. We're still in this bearish market. I mean, in a bear market. And it's kind of confusing, folks, because the VIX is really not taking off like a lot of folks, been speculating it would, and that we're back now to around some lows that we haven't seen since the beginning of 2022. Let me point a couple things out with this VIX before I move on. I want to highlight first of all how there's some mixed signals down in the VIX that we are seeing over the past week. But overall, if you look at the overall markets, they really haven't done anything in a while, but they've been drifting lower. And the VIX have been always finding an area of support, especially around this range I've been telling you guys about. And it's been hovering at the bottom of this range and not really going anywhere. But if you look at some of the oscillators, look at the CCI that's crossed over with the VIX. CCI was in oversold territory for quite a while, since around April 17th. This recently crossed back above the lower line, and with the green line crossing up the yellow line, signaling a buy signal in the VIX. So that is another bearish signal for the overall market. So with the VIX basing here, okay, with the VIX basing here, and slowly but surely trying to creep back up to this 20-period moving average. And in addition to that, if you still not convinced that the VIX will find a way to march higher, we're still hovering around lows, okay? But something I listened to another guy I pay attention to, and it makes a lot of sense. I want to point something out with the open interest on the VIX. And before I point out the open interest, I want to let you guys see the meaning, according to Investopedia, when you start to see increases in open interest for future contracts. Okay, so what happens when open interest increases? When open interest increases, this usually means new money is coming into the market for that option. As long as this is happening, the current trend will continue. Hence the way we see the VIX now, it is trending sideways, but starting to get a little bit higher. When open interest decreases, this usually is a sign that the market is liquidating and more investors are leaving. This often means that the current price trend is ending. So with that said, I'm going to show you guys what the open interest is currently showing us, the June contracts and the VIX. And this is astonishing when I heard about this. So look at this. So if you look at open interest in the VIX, look at the June contracts. And I'm going to point something out here. And this is something that you rarely ever see, this amount of open interest or this amount of interest in this VIX product. And look where a lot of the action is showing. And let me do this real quick. So here's an open June 21, 2023 contracts of the VIX. And I want to point out two areas that is extremely interesting. After I just read you guys what the meaning of open interest is, you see larger blocks of open interest starting to form. That signs that there's a lot of activity swirling around that particular strike, and there's a lot of interest in that strike. So, and with a VIX that's been basing, could this mean that the VIX will be popping sometime between now and June? That's a huge possibility. Look at open interest here. Almost 500,000 contracts traded right around at the 30 strike. That is a large block of open interest, telling there is a lot of activity. A lot of folks are interested in that strike. Also look down here at the 40 strike. Could this be a lot of folks or a lot of institutions preparing by using a spread option to be positioned in the VIX in case of a massive spike or increased volatility over the next month and a half or two? Folks, that is a large block of open interest. So I wanted to point that out, that is a huge possibility that's positioning, preparing for a big rally in the VIX. So I wanted to point that out before we went further. Okay, got that out the way. Now, So the VIX is right around the area support, the bottom of the range. So let's take a look at S&P 500. So now here is the daily chart of S&P 500. And what do you see here? Same thing, S&P 500 is still hovering just above this 20-period moving average, with price action still moving downward towards that 20-period moving average, with oscillators and the full stochastics now out of the overbought territory and trending lower. Whereas percentage out of the overbought territory. CCI out of the overbought territory with a cross signaling a sell signal. That is the current look with the daily chart of the S&P. All right, and let's switch right to the Dow Jones. Here is a daily chart of the Dow Jones. Same scenario. Dow Jones has been drifting lower slowly but surely. Now we are back towards that 20-period moving average, with full stochastics just starting to cross below overbought territory, whereas percentage already below the overbought territory. CCI just starting to cross below the overbought territory with a slight sell signal. That's the Dow Jones. We look at the NASDAQ. The NASDAQ composite, same scenario. It looks a little, then the NASDAQ and the Russell folks just been looking a little weaker. And remember, the NASDAQ is a component that consists of a lot of the tech stocks, and a lot of those tech stocks will start to report next week, with price action approaching and drifting just a little. It tipped just a little below that 20-period moving average on this past week. Full stochastics, it's been trending lower. See that downward trending, sloping action, and the oscillators within the full stochastics, and we already dipped below the overbought territory. Whereas percentage is hovering below the overbought territory. CCI also below the overbought territory with a slight sell signal. And if we take a look at the Russell 2000, same scenario, price action is now pressing against that 20-period moving average, and possibly signaling a possible break below that 20-period moving average. That could happen next week. We have to see what happens. CCI, I'm sorry, the full stochastics also hovering just below the overbought territory. Whereas percentage below the overbought territory, CCI below the overbought territory with the slight cross of the oscillator signaling a sell signal. So I wanted to do that real quick because I wanted to point that out, and I wanted to really show you guys what the VIX is showing us, folks. The VIX is still showing us that we're still in this bear market, and that there is a possible chance that the VIX is about ready to bounce. We are starting second week of the major earnings reports. So I think we may have another bank or so next week, but then I think we're going to really start to see earnings heat up and ramp up with a lot of the tech stocks. And if you pay close attention to the news, some of the tech stocks have already been signaling and have already been mentioned in the news about some trouble within their companies. There's a lot of layoffs happening, folks. And if we don't think unemployment is going to eventually tick up, then we would not be seeing so many tech stocks, tech companies, and other companies signaling all these layoffs. Eventually, we're going to see unemployment creep up, and that is going to be a negative effect, which is going to add to the fears of recession. All right, folks, hopefully this is something you guys will use, and I'll catch you guys on the next video.